Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is August the 17th, 2018. Strong hand, long-term thinking, deferral of gratification. Okay, people. So you're used to the three-person panel on the This Week in Bitcoin show. But as many of you know, I just took a red-eye flight from Los Angeles to Philadelphia because I'm speaking at the here in Philadelphia tomorrow, the 18th. It's linked to below, CryptoCoinCon.com. So all sorts of things were up in the air. I didn't know when the show was going to start. And I decided to get one guest who is the equivalent of 5 guests. So it's like we're having a 5-man panel, but it's just a 1-man panel. It is Simon Dixon. And I know a lot of you wanted to see him back on the show. We always have a blast here together. Simon, welcome back to This Week in Bitcoin. It's great to see you.
Hey, thanks for having me back, Adam. Good to see that there's still a happy face amongst all this misery.
Well, let me talk to you. I think you are a very happy face also. You're in motion. You're in the Isle of Man right now. We're going to talk about that later. But there are a lot of people that think we're in misery, mostly because these altcoins haven't had a good week. They haven't had a good month. Bitcoin hasn't either. But the altcoins have really been decimated lately. What's your take on the situation? Is this part of the tremendous cycle of life in crypto, the 5-year, 4-year cycle, or are we on to something else now? Are people really waking up to Bitcoin being the next Bitcoin and forgetting about all of this other nonsense?
We'll never forget about price. I think the day we'll forget about price is the day that Bitcoin actually becomes a medium of exchange. And the only way it will become a medium of exchange is the day that nobody thinks it's a Ponzi scheme. Nobody speculates on price. Nobody thinks it's a currency just for drug dealers. And nobody thinks it's a scam. Once those things happen, there's probably no golden hold anymore, and it will just become a medium of exchange. But until that happens, we'll always have the opportunity to have undervalued Bitcoin as a result of other people thinking it's a Ponzi scheme, a currency just for drug dealers, and a scam. And so you don't really want those to go away because that's what's given the undervalued opportunity and the store of value that it is right now. But where are we at in the markets right now? Well, what has happened, I guess, in crypto is before there was always speculation around whether Bitcoin, whether altcoins were taking market cap from Bitcoin. And there was always a thought around that they wouldn't be correlated, whether like if Ethereum was doing well, Bitcoin wouldn't do well, or if Bitcoin was doing well, Ethereum would do well, and all the ICOs and all the altcoins. And there was always a tension between whether it was taking away hash power or it was taking away attention. What 2017 proved is that actually everything's completely correlated. As altcoins and alternatives pump and bring new people to the market, more people actually get interested in Bitcoin and buy Bitcoin. And as the market gets disinterested in altcoins and ICOs, people also get disinterested in Bitcoin at the same time. But what's become really apparent is although there is a perfect correlation between the bull market, just like you have in a stock market where all stocks are up just because some stocks are up, and all stocks are down when you're in a bear market, you're having the same with the crypto market now. That's becoming really clear. But what we are seeing is a new trend, and that is that when there is a bull market, more speculative things, more altcoins, more tokens, more ICOs tend to outperform Bitcoin's stability, strength, and solidity. And when times are hard, more and more people turn to Bitcoin. And so the altcoins, the tokens, and the ICOs dump a lot harder than Bitcoin. And so we've seen that with a convergence towards the increasing Bitcoin dominance. throughout the bear market, where more and more people are flying to the safety of Bitcoin, even though we're in a correlated bear market. I think if you look at Bitcoin, it's probably down about 65-70% from the peak. Ethereum's about 75-80% the peak, and many ICOs and tokens are about 90% from the peak. Wait for that market to turn around. Once Bitcoin turns around, once we hit bull market again, I should imagine that you would see a decrease in the Bitcoin dominance as more people move to more speculative things. And you'll see an increase in the performance of altcoins, tokens, and more speculative things over Bitcoin. And people are just making their decisions around that. So these are pretty new market trends as a result of getting a more crypto-related market, with Bitcoin being the world reserve cryptocurrency of all the cryptocurrencies.
I was about to yell out, Bitcoin's the world reserve cryptocurrency. In the last line, you say, Bitcoin is the world reserve cryptocurrency. Yes, when people are panicking in the land of cryptocurrency, they're going to go to the rock, and that is Bitcoin. And we see that going on right now. Now, I want to, you said it's good to see a happy face and everything. And during your travels from Asia to Europe, from Asia back and forth, what is the vibe, percentage-wise? People that are negative and people that are positive?
I'd say the most noisy people are the most negative, like the ones that you see on Twitter, the ones that you see on the public forums, the ones that are kind of new to the market. They're the really noisy ones, and they're the least invested in crypto. I see a lot of positivity from the people that are hugely involved in crypto and have large positions in crypto and manage a lot of their wealth in crypto, because they all came from a position of thinking that the market is getting slightly overheated. We do need to calm down a bit while everyone enjoys their wealth increasing at such a fast rate that it did last year. There reaches a point where you feel like it's not so sustainable, and what you have when you have parabolic increases is you have parabolic decreases, like we're seeing right now. But during these parabolic decreases and times of depression, it's really just a redistribution from those that were superficially into the crypto market for the quick pump and dump, to those that understand and genuinely understand and have a thesis around why they're actually holding Bitcoin and crypto and what they actually think that means to the world. And then what we see is a real movement towards technological innovation. So during these bear markets, people get really, really innovative in terms of trying to help the scalability of this technology, in terms of building businesses based upon actually what customers want, as opposed to the frenzy market where whatever you build, there's a demand for it in the speculative market that we had last year. And as less and less customer service comes through, people have more time to think about what they're going to be doing. And there's some, although everyone's wealth is going down in terms of the reserves of these companies and everyone that's involved in the industry, they still build up significant wealth and significant reserves to take us through the entire bear market. And it just seems like we're in that 2014 consolidation phase, which leads to massive technological innovation that then leads to market behavior. Once we reach the phase where it's just shaking out the weak hands that you always talk about, and redistributing to the strong hands, and the strong hands are going to be the ones that are, that can ride out these bull markets. Their investment theses is a bit more long-term minded, as opposed to the short-term frame that many of these people that are fearful, scared, and rage quitting on Twitter.
Yeah, they can defer gratification. They're not impulsive. Speaking about people, or should we say institutions that can defer gratification, I think in your experience, that these large institutions are very good at long-term thinkings, have long-term perspectives, don't buy something today to sell it tomorrow. Do you have any insight on anything going on behind the scenes with the institutional investment rumors? Do you see that as being the cause of the next bull market? Do you see any negatives to possible institutions getting involved? And I mean, well, again, I'm just going to throw it out right there. I think these weak hands they're going to complain in the long run that these institutions have all the Bitcoin, but it's their fault because they were the ones selling. But you take it away.
They certainly will. I see both a positive and a negative. I see a real positive for the economic argument of why to hold this as an investment class. I see a slight negative in terms of the original mission of what Bitcoin aimed to achieve. But unfortunately, both those positive and negatives are going to be true, I think. So on the purely monetary side and investment theses and store of value and reasons to hold, then institutional money tends to be longer term thinking. Obviously, you'll still have the hedge funds fighting the pension funds as you do in the traditional markets, where the pension funds are essentially accumulating your money and pooling it together in vast quantities in order to provide a lot of the longer term thinking and liquidity for these markets, while the hedge funds are looking to fight those trends and scalp their little bit out of the market in any non-directional play or a directional play for the downside and upside. And it seems like Bitcoin is reaching, not quite there yet, but it's getting closer to traditional financial markets where you have hedge funds fighting pension funds. Now, the thing is that we don't have the pension funds in at the moment because the regulatory landscape requires a custodial solution whereby the idiots that choose to invest in this way will actually hand over their Bitcoins to a custodian. And it's the only way that you can get a regulated, financial product that pension funds and the big institutional money can invest in. And they will have to invest in it once, because they need an uncorrelated asset class, as all other asset classes are becoming so correlated. And then you saw the hedge funds create that early move. I think hedge funds have made a lot of money out of this. I do think there's a lot of short-term manipulation. Do I care about the short-term manipulation? Well, I mean, who cares? Because it happens in every market. Bitcoin's going to be no exception there. But the long-term fundamentals always do play out in most cases. And I think the institutions have really sat on the side, getting ready, waiting for solutions. And as soon as those solutions come through, they will participate. Now, the problem is that those solutions will be completely outside of the ethos of what Bitcoin's main advantage is and what it was originally intended to do, which is giving you the ability to own your own money and spend your own money, and not be subject to the mercy of counterparties that tell you when you're spending that money wrong, or if you're doing something wrong with that money that isn't in line with what they want you to do with that money, or how you want to spend that, or how they want you to own it. And so really the institutions are going to suck out a lot of the supply, because they are long-term thinkers, which is good for the economic argument of why to hold. But at the same time, they're going to be encouraging people and allowing people to get very lazy and purchase Bitcoin in a very silly way and not get any of the benefits from it. But unfortunately, that's just part of it. Bitcoin growing up, and it doesn't really change it, because you can always own your own money, spend your own money, and benefit from the increase in that. And the institutions are going to suck out a lot of the Bitcoin supply and hold those with counterparty risk, but really reduce the supply of Bitcoin and make it more competitive for those. Well, was supposedly 21 million, but so many of those have been lost or hodled over the years.
Everyone, pound that like button if you're enjoying this video. Check out the links below. Simon's link is below. DisruptMeister.com, all my archives. And of course, I'm speaking in Philadelphia tomorrow. Check that out. Now, you talk about the custodial accounts that must be created in order to fit into this regulatory framework. These are going to be honeypots for hackers. I can tell by the tone of your voice, and well, you can tell by the tone of my voice and what I say, that I don't know why people feel that they want to own quote unquote Bitcoin this way. They should just control their own private key, because if you invest with one of these funds that is going to have a custodial account or whatever, you don't really own your Bitcoin, and you're going to run into. But people are used to doing it that way. I guess this is a two-pronged question. A positive and a negative. A positive that I see with these institutions coming in is that they're going to create. It's going to create a lot of FOMO and the price is going to go up again. But I think one will get hacked. I mean, do you see a possible hack in the future? And what do you think that could bring?
Yeah, I mean, well, it really comes down to the different markets. The reason that people hold these custodial solutions is because humans are inherently lazy. Most people have a job. They're not full-time investment professionals. And they also, the majority of the world are not security and technical people that feel comfortable storing their own private keys. That's a skill that's going to separate the people that are going to lose a lot of wealth in the future is going to be those that don't embrace technology at the moment. The same people that use the same password for everything, and the same people that are going to be targets by hackers in the future. Unfortunately, cybersecurity is going to become just a bigger and bigger part of everyone's life as we move forward. It already is a really big thing. But yes, the institutions. Where was I going? I forgot my trail of thought. What was I saying before cybersecurity?
Institutions being safe. I mean,
oh yeah, why they do it? Yes, okay. So people are inherently lazy. That's it. It's not their full-time job to become investment advisors. So people are intimidated by finance. It's full of jargon. Combine technology with finance, and people are really intimidated. Most people don't. They're scared of technology and they're scared of financial jargon, and the crypto market has both. So they're going to hand it over to people that were going to manage their money for them. That's just the way that people do things, really. But the people that are really going to benefit from this are the people that really learn how to store their own wealth. Will it lead to a hack? And the other interesting trend, just before we go through the hack question, is understanding the different markets. So in Western markets like the US and UK, the stock markets consist of about 90% institutional and 10% retail, whereas markets like Korea, Japan, and China, especially China, are more like 90% retail and 10% institutional. So what's interesting is you might get a real shift around the world because the US and the UK and Western countries might be doing it all through counterparty risk and ETFs, whereas countries in Asia might be actually holding their own private keys and trying to store them on their own, just because of the retail versus institutional mismatch around the world based upon the maturity of different financial markets. Will a hack happen? God, that's going to be, it's inevitable that what happened to the exchange will happen to the institutions. But I do think that with so much on the line, with so many regulations, I think that they're going to take security a lot more seriously than a startup that was creating a Bitcoin exchange when no one knew whether Bitcoin was going to succeed, and they weren't building with the way that the way that institutions might be building with higher grade. It's just a hard one to say, because at the end of the day, securing a bearer asset when you've got such a large amount of funds is not a responsibility that I would want in any way, shape, or form. But the institutions that take it on, they're going to create a very big business. Will they get hacked? Something's going to go wrong at some point. It has to. And that will create our next Mt. Gox event, when BlackRock custodial services gets targeted and hacked.
Well, you can look at it this way too, that these financial institutions getting involved are going to get a lot of new people involved. It's going to cause a new bull market, and it's going to make it seem very, unfortunately, normal for someone to control your private key. There'll be all these people used to saying, I own Bitcoin. I call them the Bitcoin pretenders, but they really won't own Bitcoin. So since I think that's going to become prevalent again, like we were moving toward a point, like Trezor was selling out. It was so big. People wanted to control their own private key. I think once the new flow of newbies comes in, that we're going to go in the opposite direction. And it's going to become cool again to have other people control your private key. And we'll get some organizations that are going to be third-party custodial agents that aren't going to be top tier level ones. And one of those will probably get hacked. And it'll just be, and that will that will temporarily hurt the price. I'm not going to say, I think that perhaps these top tier institutions will be able to pull it off, but I think that, and I wouldn't bet on it, people. I would not bet on it at all. Just control your own private key, for God's sake.
Yeah, well, I mean, all of these top tier institutions are the same ones that have had all of your data hacked. LinkedIn's been hacked, JP Morgan's been hacked, RBS has been hacked. You know, large financial institutions do get hacked, and they're just going to be more of a target when there's a bearer asset that a hacker can take control of. And I guess that's the next challenge. You got to remember, there was a time when everyone owned like their own money, and banks were coming along and pitching people, or they own their own gold or their own bar of gold, whatever it might be, and they were coming along and pitching people. And you still get this in countries like Venezuela, or in countries like Vietnam, for example, which are, you know, predominantly cash. The banks are coming along and pitching them, hey, I got a really good idea. Why don't you give me all your money and I'll look after it for you? Sounds like a crazy, stupid idea, but that's what banking is, and that's how it was created. And there was a time when bank was this crazy scam that was thought of like Bitcoin by many people, where they were just trying to pitch you and persuade you to give them your money so that they can look after it for you and promise to repay you. And that was the pitch of banking, and it will be recreated here in this market. And I guess the end result of the people that will is the ones that can look after their own personal security, own their own money, spend their own money, and successfully do that.
Now, that there was a story earlier in the week about a guy who's suing AT&T because his phone number got stolen, and this led for him to lose a lot of Bitcoin. And it just reminds me that, and this guy was a wealthy man, that a lot of people who get into this do not understand the basics. Control your private key should be one of the basics. But another basic that I want to see, how many people you encounter that actually understand this. How many people, how many institutions even understand the following concept, the 2020 halving? I mean, do you feel, and I'm going to put it out there right now, I don't think hardly anyone gets it. And even though it should be priced in, it's not priced in at all. Because I remember the last time, the run up to the 2016 halving, everyone all of a sudden magically realized there's this thing called the halving, when they should have already, that's the reason they should have been in Bitcoin to begin with. But what's your take on 2020 halving?
I think the institutions that do get in this in a big way will definitely have researchers out there, and they will definitely do their economic homework, and they will understand the economics of it. They certainly, they need to put together their reports, and institutions are very good at, really doing deep research with smart people, and they will do that research. They will understand the economics of it, and they will have an investment thesis around it. How many people today that are purchasing Bitcoin understand even the significance of 2020? I think we've just created such a short-term culture of people that are, looking at like day trading horizons, or swing trading for a few days, or what's happening this week or this month. That very few people are looking at what the actual significance of that year is, and what leads up to that, and also the history of what happened before every other halving. We've just created such a incredibly short-term, bubbly, crazy mindset within the crypto markets, where there's a nation of youngsters that have come along in crypto and expect parabolic returns within 2 days, and if they don't get 1,000x return in 3 days, then it's a scam. Is the kind of thinking that has entered this market. And I do think that going through a bear market is going to be really good life experience for people to understand that everything that goes up doesn't always go up. It does come back down. And Bitcoin, in itself is an amazingly high return investment vehicle. If you look at the horizon, and leading up to 2020, the economics, you see that priced in, that the economics change significantly as the mining reward halves. And I'm not sure how many people fully understand that. I think the investors understand that, but the speculators probably have no idea.
Well, I think there's conglomerates out there, whether they be media, whether they border on media and finance, that talk about the greatness of Ripple. I don't think they know about the 2020 halving. If you're telling people to buy Ripple, I think you're in a whole different world. You're in this for a completely different reason than limited supply.
Most people are into Ripple because they think the cryptocurrency is a stock, and they don't know that the economics absolutely suck in terms of an investment thesis.
And Bitcoin is the next Bitcoin. They want to, another reason people get into these things, they want to have the next Bitcoin. They don't get that Bitcoin is next Bitcoin. I always say you got to be in motion here. You got to be in motion trying to learn too. There's just a lot of people that are like day trading. That's what it is. It's about flipping. That's it. They don't try to get the next couple steps, which are really important. But speaking about, learning and being in motion, there's a guy here on the chat that has a question for you. It's a good question. Simon, if I want to work at a company like yours, would you recommend getting CFA?
Interesting. I do know quite a lot about those qualifications and CFAs, because that was one of my first businesses that we were involved in. I don't think we would necessarily. I think CFA would be like, so for those of you who don't know, it's a Chartered Financial Analyst qualification. My guess, I don't know, maybe I haven't been up to date, but my guess is that they're completely behind in terms of financial markets at the moment. I don't know if they've adjusted to crypto. Maybe you know a bit more. But I do think that there's always benefits in understanding traditional finance. It's the qualification that research analysts, if you want to work in an investment bank, if you wanted to work for a company like us, we tend to look for missionaries. We look for people that are, in this for the right reason, because those are the people that are going to hang around. It's expensive to turn over staff. And we're looking for people that are in it for, the right reasons. Would a CFA help? I mean, yes, it would show that you've got an interest in finance, you've got an interest in traditional finance. But, in terms of, are you going to use any of that knowledge at our company? Probably not. It's not going to be practical. Degrees, I don't think, teach you anything in terms of what you're actually going to be doing in any of these things. So, the new degree is doing what you're doing right here. I mean, yes, you've got your CFA qualification, those things help, but also combining it with a bit of Adam Meister, a bit of World Crypto Network, and everything else this is where the real education is coming. So it's in terms of job prospect, I don't know, it's such a different world now to, when you used to get a degree that would then train you for the job. I just think I don't see that right now. We don't tend to look at technical qualifications when we hire. The people that we're looking for are missionaries that are in this for the right reason, love the company, love what we're doing.
All right, this is where the big boys play. There are no gatekeepers that automatically make you qualified. You don't need a degree in crypto to work in crypto, etc. And that is cool. And I'm glad you got an open mind to that too. Because Simon at Bank to the Future, he's a big name here in this space, man. He's not just looking at fancy qualifications and degrees and everything. He wants, people that have, prove that you got pure knowledge. You've been watching Adam Meister and World Crypto Network. There you go. Pound that like button, everyone. Okay,
isn't Vortex and Jimmy Song doing a lot in that space right now?
Oh yeah, they're teaching their butts off. Yeah, there's a good plug right there. Vortex and Jimmy Song. Vortex just started a new one. Check him out over there. Let's talk about a name that was bantied around this week. Bitmain, their IPO. What's your take on that? What have you heard about that?
Bitmain is without a doubt the most successful, most profitable company in our industry, and the fact that they're the first to IPO is a bit of a surprise. I would have thought that Coinbase would have got there first, just because US companies are more prone to IPOs than companies in China. But I think they're at that stage right now. The interesting thing about that was the amount of disclosures that comes out, and that's going to be a really interesting thing. Obviously, the crypto market hasn't been used to such disclosures, but when you go public, there's a serious amount of disclosure that needs to go on in there. And what I found really interesting is if you looked at I managed to get hold of the pre-IPO investor deck, and in the pre-IPO investor deck, they had to disclose their crypto holdings. And one of the things that I found really interesting is that Bitmain has over 1 million Bitcoin Cash.
Yep.
For those of you that know the history, you'll know that the Satoshi Nakamoto address holds 1 million or thereabouts of Bitcoin. So the parallels are really quite interesting, because Bitmain was the one that forked off Bitcoin and created the Bitcoin Cash ABC client. And they ended up with 1 million Bitcoin Cash, whereas Satoshi was the group or individual that created Bitcoin. And because they were the only, it was very centralized in the beginning, and they were the only people mining it, and no one was interested in it. We didn't have the crypto market that we have right now. So, you know, that was building the same developers are building the wallets as mining and maintaining the code. And it was extremely centralized in the beginning. And therefore, Satoshi Nakamoto accumulated 1 million Bitcoins in just trying to get people interested. The difference, I guess, is that Satoshi Nakamoto publicly declared that he left the project a couple of years later, and he's never moved his coins. But with Bitcoin Cash, you got Bitmain, that is essentially the Satoshi. They own 1 million of Bitcoin Cash. They were the creators of the code. They were the original ones mining it. I guess it's in the same place that Bitcoin might have been right at the beginning, except for it was all done under a company that's about to IPO that had public disclosures. And therefore, those 1 million Bitcoin Cash are about to be owned by the public, and those public are going to be looking for their dividends, and those dividends might be as a result of unloading some of those crypto positions if Bitcoin Cash gets caught up in the bull market that Bitcoin will eventually create. And I think it just really highlights some of the differences between Bitcoin and Bitcoin Cash as a result of those disclosures from a company creating a coin and accumulating the largest position in the market, and then having to disclose those positions because they're going public.
Now, it's about these disclosures. You took a very professional approach to explaining what's going on over there. There was, and you had not, we talked about this before the show, there's been a lot of drama over those disclosures. I mean, people in the ecosystem are just saying they're IPOing to bail them so they don't have to sell their Bcash. You know, that's a theory there. So you see, you've always had a different perspective on a non-emotional perspective on Bcash. And part of that is you see things differently in Asia. They don't see Bcash the same way as we do in the English-speaking world. I from what I've gathered, from what I've heard from you and from other people also. So you had not heard, you know, you hadn't heard a bad vibe from this news story, had you?
Well, I mean, you know, the crypto community is incredibly good and interesting at doing their, you know, crowdsourcing of due diligence and coming up with every kind of theory under the sun, every conspiracy theory. And it's a great community for, you know, really coming up with these thoughts around what they're doing. But no, I mean, you know, Bitcoin Cash is a controversial subject. It's more popular in certain regions of Asia than other regions. And, you know, and that's mainly because one of the biggest promoters and creators and, you know, the advocates for Bitcoin Cash are based in Japan and China. You know, those are local heroes to many people in the crypto industry. So it tends to give off a different perception. But I don't think that, you know, I don't see this as good news for Bitcoin Cash, because it really highlighted that there is a massive centralization issue. The fact that a private company owns, you know, the same level of Bitcoins that Satoshi Nakamoto allegedly has in the Satoshi address. I think that's, you know, really highlighting some of the differences in terms of the centralization.
Again, I agree. I agree with you. Why it's not a positive in that very unemotional point, that it's clearly very centralized. These disclosures have revealed the centralization. What, you know?
Well, think about it. If Bitcoin Cash becomes what they think, you know, Bitcoin Cash supporters are looking for it to become, it means that Bitmain, who owns 1 million Bitcoin Cash, and if Bitcoin Cash becomes cash for the world, the value of those Bitcoin Cash and the 1 million that the public will own as a result of investing in that IPO, but the public won't really own because it will all be controlled within a company, and they will have non-voting shares, most likely on the stock market, would make Bitmain the most powerful company in the world if Bitcoin did become cash for the world. It would be a multi-trillion-dollar company, and that would make I think Bitmain more powerful than the entire central banking conglomerate, which I think would be a very, very bad way to actually. I mean, I guess it's worse than PayPal at that point in terms of the centralization and the power that be invested in one company if that goal is achieved.
Yes, that's again, you're putting it just the logical reasons out there. No emotion. I like that. Pound that like button, guys. Well, we're speaking about countries, them being the equivalent of a country there almost. What's your take now on the stories that have been coming out this week about all sorts of devaluing of currencies, Turkey, how it relates to cryptocurrency? Any thoughts on that?
Yeah, so firstly, sorry, condolences to those people that have their life savings in these currencies, and they're seeing devaluations in the international markets as a result of economic policies that are being made with these currencies. But this is the original user case of Bitcoin, and stories like this help us to remind us why we're actually in this and why this is such an important invention to bring to the world. It gives people the ability to exit from the traditional financial markets. It's a currency that uses code, and code that's fully understood by all participants as its monetary policy, rather than the whims of the country trying to make decisions based upon what they think is right for their country, but often is right for politicians and governments' invested interests. So while fiat currency does serve a purpose as a currency for domestic people in those currencies to spend and purchase goods as a medium of exchange, it really highlights the importance of Bitcoin and gets us back to our mission. And I remember, the original missionary events in Bitcoin were when you had the Cyprus bail-ins, and were when you had the Greek ATM shutting, and when you had India declaring that this cash is no longer, legal tender, and you had to wash it through the banking system. And these are the important events that helps people realize why Bitcoin is important, and it gives people choice. It gives people exits from these, the people that are managing on the macro level, but may not have your best interest at heart at the micro level. And Bitcoin allows you to have your own interest in heart at the micro level, own your own money, spend your own money, and a monetary policy that rewards the saver in the long term and punishes the debtor. And that is what we're creating here, and that's important. Important events like this helps people remind us of, why we're here. Yes, Bitcoin has crashed 70 odd percent in the last year, but I've also had $30 Bitcoins that crashed to $3 Bitcoin. I've also had $1,200 Bitcoin that crashed to $250 Bitcoin, and now I've had $20,000 Bitcoin that crashed to $5 Bitcoin, and I'm sure I'll have $100,000 Bitcoin that crashes to $20,000 Bitcoin. And the longer you can continue to play that, I believe that the more you will be rewarded, as this currency rewards the saver and punishes the debtor.
Listen very carefully what he said there, people. There will be other bull markets, and there will be tremendous crashes if you value your wealth in fiat. That's why you just got to keep that one Bitcoin equals one Bitcoin. Long-term thinking here, okay? The roller coaster will get wilder than this in terms of fiat. Now, you made a good point that that events like this, Venezuela, Turkey, Iran, it wakes people up to this. But does it actually get them moving? Does it get more or more? I think that institutional investment, which is coming along, is going to gobble up more Bitcoin than the individuals in all these countries that should be flocking to Bitcoin because they realize what's going on. It's the way of the world. It's kind of a sad way of the world that these people who are suffering, who are learning how bad this system is, they're not going to make the moves. I believe, because some people have tweeted out, oh, this is the thing that's going to spur this mass buying of Bitcoin, all these people from India, et cetera, et cetera, et cetera. I don't think they're proactive enough. I think some people will, but I think in the end of the day, we're going to look back, in 10 years and say, you know what, it was the institutions that caused the big pump. It was not enough individuals got in. Institutions bought up more than individuals. What do you think about that?
Yeah, it certainly seems like it's going that way, and it's a real shame, because this was this is the currency that was designed for the individual to own their own money, spend their own money, and be rewarded for that. But unfortunately, I guess currency doesn't change human psychology and human skepticism and human traits. And the fact of the matter is that there will always be definitely be a redistribution of wealth. But unfortunately, people are going to get on the wrong side of that redistribution. And maybe the institutions are going to be there. The saving grace is, I do think that there is a lot of people that do hold sizable positions in Bitcoin, or small positions in Bitcoin. And they've already accumulated those positions, and they're leaving those positions. And if they don't get caught up or involved in the emotion, the real tragedy, I think, is the people that had Bitcoin that were in before the institutions, and they got caught up in the emotion of these markets, or they got too involved in over trading, and ended up in a short position where they ended up with negative Bitcoin instead of positive Bitcoin. These are the real tragedies, because they probably understood the market. They just got caught up in, I guess, in greed, and end up with no Bitcoin. I feel for those people, but then again, Adam, is the personal responsibility. We make our own decisions, and even if you have made those decisions, change them. It's not too late. You're still an early adopter. While the prices are down, charge people for your service, for your entrepreneurial skills, for everything you do in Bitcoin. And if you're invoicing them in dollars, then you're going to receive more Bitcoin as a result of these bear markets. So I think people should be charging and accumulating in fiat terms, and asking people to pay in Bitcoin in these bear markets, so that you can reposition your portfolio size and your assets.
Yeah, that was really a great point about the people who did have 10 Bitcoin and then played a lot of games and ended up with one. That's a shame. It's the true shame, though, is if they just stay stagnant and depressed at that point. If they get back in motion, they can get back to 10 Bitcoin again. It's not over till it's over, and it's not over yet, people. That's what
the time to do that is when everyone else is despondent, when the price is low because everyone else is selling. That's the time to be to reposition and accumulate. So if it's all gone wrong, if you've learn from them, but react while it's the bear market, because in the bear market is when you can get, if you're thinking in dollar terms, you can get more Bitcoin for everything you do, and in the bull market you can benefit from those as well.
All right, now we were talking about bad countries. I'm not a fan of any country really, but let's talk about a country with a cryptocurrency policy that interests you. You're in the Isle of Man. What's the news on the Isle of Man this week in Bitcoin?
Yeah, so I'm between Isle of Man and Hong Kong, two very, very different places. There's not a lot going on with Isle of Man at the moment. They were one of the very first to actually jump on the crypto. They saw the opportunity in crypto before many countries. They've made policy changes, but actually, and this is showing the speed of the crypto market. All of the innovation and all of the opportunity for companies involved in crypto is now moving to Malta and Gibraltar, and those countries have really made some significant shifts. And the main thing I'm observing when you go to these different countries is when you get banks that are willing to serve crypto businesses, plus regulators that are on the same page as governments that want to create the jobs, plus governments that see the opportunity in all the jobs that can be created as a result of this market, you get the perfect storm and what I believe will be the next superpower countries. The two countries have done that in the biggest fashion right now, where everyone's on the same page. It's definitely Malta and Gibraltar. In Isle of Man, you've got a couple of those on the same page, but you don't have you got the entrenched banking system that's still trying to not serve the crypto businesses, and you got different types of regulators that may not be on the same page, and those are the differences that you're seeing right now. But Isle of Man, again, the one thing that makes me really interested is it's a country that has sufficient independence from the UK. It's got its own independent parliament, but it also has some dependency because it shares the same currency and the same central bank because it shares the pound. But what's quite interesting is it's got the mandate to print its own pound, so it can print its own cash and coins and notes. But it still has the digital banking system that clears through the Bank of England, and therefore they can use that in order to exercise unnecessary control. But what's really interesting is if you could create a digital pound that gives them some of the independence, and also create an environment where people are supported for having Bitcoin, then you can create a really interesting experiment, as it were, in terms of centralized currencies being used to get independence from central banks, at the same time as supporting the ability to own your own money and spend your own money with Bitcoin.
Yeah, that is an interesting point there, and I'm glad you're keeping an eye on things there. Keep us updated with that. I do. There was one thing that you brought up. Countries that have banks that are willing to work with crypto or deal with crypto. I do not, you hear all these horror stories about banks shutting down accounts that have anything to do with crypto. Is there a certain country profile out there where what country type of countries fit that description where they're going to have banks that are willing to work with crypto? Are they just small little island countries like the ones we're talking about, or are we going to have some bigger name ones?
It's a real systemic problem. The banking crypto friction is just a real ginormous problem. The reason for it is because you've got money laundering regulations that state that you need to know the source of funds and source of wealth of all of your clients. And the crypto business, Bitcoin gives ultimate transparency in terms of the history of transactions, but anonymity to the user. But therefore, once you identify yourself in the banking system and you try to make a fiat crypto transaction, they can look back into the blockchain and find the entire history of everything that's happened. Now, if those cryptocurrencies many, many years ago came from as a result of Silk Road, then it creates a flag and a huge forensic investigation job, that if it turns out that there was any money laundering or any shenanigans going on, then the bank will be responsible for allowing that transaction to go through. And so therefore, a lot of the banks just say the easiest way to deal with this is just not do any of that, because if I'm sending, you're depositing 10 million worth of crypto, I'm probably going to make 30 pounds or dollars out of that transaction. But the forensic investigation that's going to need to go on as a result of the blockchain is something that, one, we're not comfortable with, and two, it creates risk, and three, by the way, you're trying to disrupt us, so why should we support that anyway? That's a real problem. And even when you get a bank that wants to support the industry, you then get a clearing bank that they need to clear through, that then says, well, actually, we're not happy with this policy, and therefore we're going to remove your ability to clear in dollars or pounds as a result. And even if you get a clearing bank that's happy with that policy, you then get a central bank that says, well, actually, we don't want you to support this industry because we're happy with our little monopoly and our game that we've been playing for decades and built up for years. So it's just a real ginormous systemic problem that is very, very challenging to solve. But so the companies that we're seeing, rather than a country that wants to do it, is you're looking at small countries like Malta, whereby some businesses because crypto is attracting massive investment at the moment, you're seeing them able to raise sufficient funding to buy out banks and build them from the ground up with crypto policies in mind, and actually create some kind of policy, and procedures around solving this friction. So it's not really the country level. It's that you've got these little banks in places like different places in Europe and different jurisdictions that are at a price and phase right now where they can be acquired by a crypto business that might have done an ICO or might have afford it because of their positions in Bitcoin, or just the vast amount of finance has been attracted into this industry where they can acquire the bank and then build it from the ground up. And that's really where you're going to see some of this innovation. And once you need a government that's got a desire to support that, and a regulator that's willing to have that type of innovation happen under their watch, or you just own Bitcoin and Trezor becomes your bank.
Heck yeah, guys. Get that Trezor, link to below. Pound that like button, everyone. I wanted to say about, you almost repeated there was a tweet from, I forgot who it was, Whale Panda or someone said that eventually the crypto people are going to be buying banks. And you said it yourself. I think that's the solution if you want to get involved on that side of things. Instead of worrying about what bank is going to give into your is not going to care about know your customer and embezzling and all these other things, just buy a bank. And I think we will see that in the future. When that starts to happen, that'll be great. It'll be a very
we're already some interesting trends that we're seeing in this bear market, like a Bank to the Future. Obviously last year was all about people that wanted to purchase tokens as investments. In the bear market, we're seeing a movement towards equity. Now everyone wants to sell equity, and we're seeing a lot more equity deals on the platform. But we're already in touch with about 3 banks that are looking to list on the platform, that are looking to do exactly that, which is raise the funding through equity, use tokens as some kind of security token model to give some kind of the liquidity and benefits of what used to happen in the token market. But the funds are being used to purchase a bank that's already got the EU licenses and different stuff. And so we're seeing quite a lot of that. In the just over the last few months, we've seen about 3 different applications from very reputable teams that are looking to acquire banks as part of their business plan.
Excellent. This is, I think we should leave it on this note, because someone's picking me up to go over to where the conference is tomorrow. I'm going to check it out. I'm really pumped, but I wanted to give you your time to bring up anything you wanted to bring up that hasn't been brought up in the show. You always have inspirational words of wisdom. Again, this is like having 5 people on the panel here today. Everyone, pound that like button if you've enjoyed the show. Take it away, Simon, with your thoughts or anything that was left off.
Yeah, I mean, I think we've covered most of it, Adam. I know that there's a lot of negativity out there, but I think there's reassurance and from understanding that we've all been here before. And I really remember very clearly, what it was like when there's just bad news after bad news. The price is going down. You think your wealth is going down. You were extremely excited about where you were going that time before. But still, you just got to kind of reevaluate, remember that everything that was true last year in terms of the economics of this crypto market are still true today in terms of Bitcoin will only have 21 million. And there's still, the halving and the things that Adam was talking about earlier on this podcast. And so it just means that you've got to just reevaluate in terms of longer term thinking. And I do remember, the exact same emotions where you were getting rage quitting, you're getting people that telling, you start to have all the doubts about the things that you believed in the bull market. But this is a community driven thing. You got to be, and it's just the bear market, they because it went up too high, you tend to get these crashes and they feel, the emotion can be felt there, and money is a very emotional topic for a lot of people. But just put together a longer term game plan and really try and think differently and try and think about what opportunity this brings for you, because with every bear market is an opportunity for some of the biggest companies and some of the largest wealth to be created in history. And there's many examples of that. If you look in the traditional world of companies like Disney and Microsoft, were always created out of opportunities, and Apple, in bear markets and recessions. And this is you might be experiencing your first crypto bear market, crypto recession, let's call it. But what kind of opportunity is that for you? And what are you going to contribute to the community so that you're ready for the bull market when it comes around? And just start thinking about value you can add to this community, because it is going to turn around, and the people that are going to benefit from that aren't the people that are jumping on the bandwagon at the end of the bull market. It's the people that are putting the graft in right now, and making decisions right now when everyone else is thinking differently.
Well said. Thank you, Simon Dixon, for being on the show today. People, take the emotion out of the game. This is where the big boys play. You didn't lose anything. You still have the same amount of Bitcoin as you did today. It's just the fiat stuff. It's paper. It's on paper. You still have the same amount of Bitcoin as you did, unless you traded it away or something wacky like that. But remember, guys, when we say 1 Bitcoin equals 1 Bitcoin, this is what we mean, what we've been talking about all today. Thank you again, Simon Dixon. I'm Adam Meister, the Bitcoin Meister, Disrupt Meister. Remember to subscribe to this channel, like this video, share this video, check out the notes section below, pound that like button. I post a new show here every day. This show comes on every Friday, This Week in Bitcoin. You never know what time it's going to be on. You never know where I'm going to be. Tomorrow, we'll have the Beyond Bitcoin show. I have no idea what time it's going to be. I got to be at a conference all day. It's going to be a blast. But thanks a lot, everybody that was watching. Thanks a lot, Simon. See y'all later. Have a great weekend. Bye-bye.